Good morning and welcome back to Iraqi Dinar, your trusted source for real updates, insights, analysis on global currencies with a sharp focus on the Iraqi Dinar and the Vietnam Dong. Today, we're diving into some absolutely explosive news that has the potential to change how you view your currency holdings forever. Imagine this for a moment. You've been holding onto the Iraqi dinar or the Vietnam dong for years, maybe even decades, waiting patiently while rumors, speculation, endless chatter filled the air. And then suddenly we're seeing real signs backed by economic data, government actions, and international trade developments suggest these currencies could actually rise to levels no one thought possible just a few years ago. Could the Iraqi dinar truly reach 5.90? Vietnam dong really touch 4.29. These aren't just wild rumors being thrown around on internet forums anymore. These are serious discussions coming from economic circles and investor communities that track the movements of emerging market currencies. Stick with us all the way through today's update because this could genuinely be the most important financial news of 2025 for anyone who has been following or investing in these currencies. Let's start our journey today in Iraq, a nation whose financial story is as complex as it is promising. Over the past few years, has been recovering steadily from the setbacks of war, political instability, and decades of infrastructure damage. Yet through all of this, Iraqi government has shown a commitment to rebuilding not just the country's physical infrastructure, but also its financial framework. Key reforms in the banking system, efforts to bring transparency into government spending, steps to modernize the overall economy are laying the foundation for something much bigger. And perhaps the single most important element in this conversation is oil, is one of the largest oil producers in the world, and its production levels have been on the rise. Reports show not only a return to stability, but also an increase in efficiency with output that has been meeting and in some cases surpassing OPC expectations. That means more revenue for the government, more investment into modernization projects, more confidence among foreign investors who want to see Iraq as a stable and reliable partner in the global economy. Now, one of the strongest signals that Iraq is ready for a potential currency revaluation comes from its move away from an outdated cash-based system toward a modernized digital banking structure. This isn't just about convenience for citizens. It's about aligning with international financial standards. When a country can show that it has secure, trackable, and transparent banking systems in place, it immediately builds credibility with global markets. Has been working hard to implement electronic transfers, strengthen financial monitoring, and cut down on corruption that once plagued its economy. Investors see this shift as a very encouraging sign because modern banking is a cornerstone of any currency that is looking to appreciate in value. When you combine that modernization with Iraq's oil revenues, its investment into public services, and its push to rebuild trust internationally, start to understand why experts are beginning to talk seriously about the possibility of the dinar reaching levels like 5.90 Delu over time. Of course, this doesn't happen overnight, and that's something we're going to emphasize throughout today's update. For investors and holders of the Iraqi dinar, it's important to take a realistic view. Yes, there are projections out there that suggest 5.90 is within reach. We need to understand what that number really represents. It's not a lottery ticket, and it's not going to happen in a flash. It's a figure that's built on the assumption of steady economic growth, ongoing reforms, and a government that continues to stabilize both politically and financially. Currencies move based on trust, supply and demand, and global trade flows. And while Iraq has a lot going for it, including the world's attention on its oil industry and reconstruction projects, patience is going to be the key. For long-term investors, this could very well be a life-changing move, but it requires discipline, awareness, a strategy that looks at the bigger picture rather than expecting overnight reaches. Now, let's shift our focus to Vietnam, a country that has been quietly and powerfully transforming into an economic powerhouse in Southeast Asia. The Vietnamese economy is on fire, not just from oil or natural resources, but because of manufacturing exports, and foreign investment. Major global companies, from technology firms to automotive giants, are pouring money into Vietnam to set up factories, production lines, and entire supply chains. Why? Because Vietnam offers a winning combination of lower costs, a skilled workforce, and a government that is actively encouraging foreign direct investment. This boom in manufacturing and exports has fueled Vietnam's foreign reserves, created new jobs, and brought international attention to its currency, the dong. Here's where it gets interesting. Recent discussions suggest that Vietnam might be ready to shift from its current currency peg system into a managed float model. If that happens, the dong would begin to reflect the country's true economic strength, potentially allowing it to appreciate and possibly hit levels around 4.29. A managed float is an approach used by many successful emerging economies in the past. It's essentially a middle ground between a rigid peg, which keeps the currency tied closely to the US dollar, and a completely free float, where the market determines everything. In Vietnam's case, this model would mean the central bank still has the ability to step in and prevent extreme volatility. But at the same time, the dong would be allowed to rise gradually in response to real market forces. This is exactly what happened in countries like China and South Korea as they grew into global players. Their currencies gained strength as the economy expanded and foreign confidence poured in. Vietnam's fundamentals are solid. Export growth is remarkable. Debt is manageable. Reserves are at record levels. Trade agreements have positioned the country as one of the most reliable partners in Asia. All of this suggests that if the government takes the step toward a managed float, the dong could indeed begin moving toward that much discussed 4.29 figure.